Guys, Netflix stock is crashing and we got to break it down in this video. We have to go over what the heck is going on with the company, the numbers they just reported yesterday, why the stock is crashing, and of course, at the end of the video, we're going to break down whether or not I'm buying, staying away, just waiting. We're going to break everything down. But before we do that, make sure to get your free money from Moomoo, up to 6 free stocks. Just use that link down below, deposit at least $100, and boom, you get up to 6 free stocks, each of which could be valued all the way up to $3,500. Again, just use that link down below. And with that being said, let's dive into the video. So check it out, guys. Netflix is currently down 36%, and it's only 11:15 a.m. on the East Coast right now. The markets haven't even been open for 2 hours yet, and mind you, the markets in general right now, guys, are not looking that great. I guess the Dow's doing well, and the Russell. I guess it's a mixed bag, guys. The Russell's up 0.6, the Dow's up 0.7%, but the NASDAQ, the tech stocks today, aren't doing well. Triple Q's down 1.2% as the S&P is pretty much at break even. And we saw what happened after market hours yesterday, guys. Netflix reported, which ended up obviously tanking Netflix stock, but it also brought down Triple Q. So let's take a look at that very quickly. And I don't want to spend too much time on the overall markets. I want to talk just strictly about Netflix in this video. So make sure you guys subscribe if you want to see my video later on today, which is where we will be talking about the markets more in depth. So you guys can see here when Netflix reported quickly, Triple Q went down from 346 to about 342. It lost about 1%. And we had Netflix, going back to Netflix, it dropped about 25%, and now it's down 37%. So what the heck is going on, guys? Netflix reported $3.53 EPS versus $2.90, so they actually did very well when it comes to EPS, but revenue didn't do so well, $7.87 billion versus $7.93 billion, so they ended up missing on revenue, and Q1 global memberships, paid memberships, came in at 221.6 million, up only 6.5% year over year, and the net additions were down 200,000 net additions for global streaming paid memberships. And a lot of that has to do with, I guess, really all of it has to do with them cutting Russia. Not all of it, but in terms of that loss is what I'm saying, the $200,000 or 200,000 subscriber loss. If they didn't cut Russia, guys, they actually would have gained 500,000, because I think from them cutting Russia, they lost 700,000 memberships. So do the math, minus 200 plus 700 is plus 500. So we would have saw an addition of 500K, but overall we didn't see that. And if you guys look at the guidance, the memberships, they're going to get even worse. The decline here is going to get even worse, which, mind you guys, this is the first decline in paid users in more than a decade, which is it's pretty wild. And again, it's going to get even worse here. So before we talk about the global paid memberships more in depth, for Q2 revenue, they see about $8.05 billion versus $8.21 billion estimated. So the next quarter revenue is looking to be lower than it was, or lower versus the estimate rather. And EPS is looking to be about $3 versus the $3.01 estimate. So a little bit under EPS guidance. And the global paid memberships are going to be around projected 219.64 million, which is 2 million less than what they just reported. So this loss in subscribers, we just saw 200,000, it's going to go to 2 million now. So the loss pretty much 10x from 200K to 2 million. And we can clearly see that being priced in the stock right now. And we'll talk a little bit more about the stock numbers later on in this video. So make sure you all stick on throughout. And if you are enjoying this video, this breakdown, make sure to hit the like button, subscribe. We're almost at 25,000, guys. Make sure to subscribe. And at the end of the day, guys, this went from a crazy growth story back in, during the pandemic, even before that, obviously, and now it's being repriced. It's being repriced in a major way. From $700 back in November, now it's sitting at $212, $20. It is down 70%. And I mentioned this yesterday. That's nuts because this is one of the FANG stocks. Facebook, Apple, Amazon, Google, Netflix, Microsoft. It is in that group of companies, and the fact that it's down 70%, I just can't even believe it. But it's reality. It's being repriced. Growth investors are like, oh, we got to get out of here. Growth is slowing down. And they're trying to revamp that growth globally. They're trying to grow globally. And now they're cracking down on passwords. We'll talk about that now, the sharing of passwords. So Netflix said more than 100 million, get this guys, 100 million global households use a shared password, with more than 30 million of those in the United States and Canada. And the company said more than 100 million additional households were likely using a shared password, like I just said. I don't know why I said that twice, but I said it twice, guys. And in its quarterly shareholder letter, Netflix acknowledged it has purposely allowed generous out-of-home password sharing because it helped get users hooked onto the service. And in 2016, Reed Hastings was saying, like, it's not affecting the growth of our company. Again, it's getting people hooked on the service. But now that there's more competition, the growth is halting. They're changing tune on that, right? They're changing tune on that. And they want people to start paying. And they also said here, our relatively high household penetration, when including the large number of households sharing accounts, combined with competition, is creating revenue growth headwinds. Like I said, the revenue growth is not looking that great right now. And account sharing as a percentage of our paying membership hasn't changed much over the years, but coupled with the first factor means it's harder to grow membership in many markets, an issue that was obscured by our COVID growth, which they saw ridiculous growth during COVID, which is self-explanatory, right? People are home. They're more locked down in their houses. They're not working, or they're working from home, whatever. They're going to need to do something for entertainment, right? Netflix, all these other streaming services, they popped off in a major way during COVID. So the crackdown, Netflix is cracking down now because they got to revamp revenue growth in some way. Again, they're doing that abroad, and now they're trying to do this. Earlier this year, and this goes into the crackdown a little bit, earlier this year, Netflix began testing different ways to curb password sharing in Chile, Costa Rica, and Peru. Executives said on the company's earnings call Tuesday that it would expand, or rather it could expand, the model it laid out in those countries. Again, Chile, Costa Rica, Peru, charging extra to accounts that share passwords out of home. And Netflix didn't outline a concrete global strategy yet, but suggested global changes could come as early as 2023. So that is a sign that they're coming after you and me, quite honestly, because I do share my Netflix. I'll be quite honest, guys. There's like 4 people on my Netflix. So a lot of us, they're coming after us, and we're going to have to pay more money. And if you have some of these other streaming services like Disney, Hulu, HBO, the list goes on, this might force you to cancel either Netflix or some of the other ones. And it's going to be an interesting time. Let's just put it that way. The days of Netflix being the only streaming service, those days are gone. Do you remember that when Netflix was like $8 a month or $6 a month or whatever, and there were no other streaming services? They slowly creep the price up, and now it's whatever it is a month. I don't even know what it is a month. But it's whatever it is a month. And now all these streaming, other streaming services are coming in, and they're starting off with a low price. They're doing the same thing that Netflix did. Disney's pretty cheap right now, if I remember correctly. I think it's only $8-9 a month, whatever. So they're gonna do that model. And a lot of these other ones are going to do that as well. They're doing it. And the truth is, guys, Netflix has a lot of competition. Again, these are not the days where Netflix is the only dog in the fight. There's a lot of competition from Disney Plus, Hulu, HBO Max, Amazon Video, YouTube, Paramount Plus, Apple TV Plus, Warner Brothers, Discovery. And the thing is, people subscribe or they sign up or whatever to a lot of different services here, and they're not loyal to just one. If Netflix doesn't have any movies and shows, I do this myself, guys. I have Netflix, I have Hulu, I used to have HBO. I don't think I have it anymore. I might have canceled it. I don't have Amazon Video. I have YouTube. I have a lot of them. That's the point, right? And the thing is, people shop around. If there's no movies on Netflix or no new shows, they're going to go to Hulu. They're going to go to HBO. They're going to go to Disney and see what's on there. And if they're not using a particular service, maybe Netflix, they're just going to cancel it until the new show comes back on, and then they're going to resubscribe. That's how people are doing it these days. And that's obviously hurting Netflix, and we'll see if they end up clawing out of this. So let's talk about some numbers, guys. We're not going to go too deep into it because I kind of want to focus more on the reasons why Netflix is falling and kind of, the story behind it now. It went from a huge growth story to now it's down 70%, and now it's almost turning into a turnaround story. I don't want to say value play quite yet, even though it's getting there, guys. The trailing 12-month P, and maybe I'll put a screenshot up right here while I'm editing this video of what I'm looking at right now. The trailing 12-month P, now it's actually under 20. It is now 1998 when I'm filming this video, which is pretty crazy. The market cap is under $100 billion, guys. We're talking about a $99 billion market cap. I mean, that's just crazy. Wasn't Netflix $300-400 billion? Now it's under $100 billion, which is pretty mind-boggling. And I saw a lot of analysts, they were downgrading Netflix, or not necessarily downgrading it, but cutting their price targets like crazy. So Netflix is going through the ringer right now, guys. It is going through the ringer right now. And if you are a believer in this company long term, now would be the time to buy. I'm not giving you all financial advice. I'm not telling you what to do. In fact, I'm not buying Netflix. I'll be the first to tell you, I'm not buying it right now. I'm not saying I'm never going to buy it, but I'm not buying it right now because I already own Google, Apple, Amazon. I started buying Meta platforms. I own all these other big tech names. I don't want to add Netflix to the list, guys. And quite frankly, I already own Netflix through the ETF holdings I have. So for me, I'm not looking to buy it. But when companies are going through the ringer, when they're getting their what's kicked, and there's negative news after negative news, if you're a believer in the 3 to 5, 10-year outlook, that is the time to buy. And if you're right, you could do very well. Let's say if you buy Netflix at 150 to 200, 250, where it is right now, which you could make an argument, a serious argument, that the company is undervalued at these levels. Again, we're not going to run through a lot of numbers in this video, but you can make that argument. If you buy at these levels, then all of a sudden in a year or two, global or international growth is looking great. They crack down on the sharing passwords. People are paying up more money. They open new accounts. All of a sudden, what's going to happen if they crack down on these, sharing passwords, guys? 4 people are on one account. I mean, 2 or 3 of those other people are going to have to make a new account. So, if this subscriber growth starts kicking back up again in a year or two, this could easily go back to 500 plus. I'm not saying 1,000, 2,000 or something freaking ridiculously crazy, but it could go from 250 to 500, maybe a little bit higher than that, maybe higher than that. Who knows? And that's kind of how I'm looking at it, guys. But we're not getting that yet. The reality is, in the short term, we're going to see headwinds. We're not quite yet at the point where we've bottomed and recovered. We're going to get even more losses here, declining loss in subscribers. So until that kind of figures itself out, I'm on the sidelines with Netflix, and I'd love to know your thoughts in the comments. And we might as well wrap the video up here. If you enjoyed it, hit the like button, subscribe. Let's get to 25,000 subscribers, and make sure to get your free money from Moomoo. Join my Patreon. All that's linked down below. And Moomoo, guys, I'm telling you, they're running the best promo right now. Just use that link down below, deposit at least $100, and you get up to 6 free stocks, each of which could be valued all the way up to $3,500. Again, use that link down below. I'll catch you guys in the next video. Thanks for watching. Peace out.